This is Bloomberg Crypto, a daily Bloomberg iHeart podcast. And I'm stacy-marie Ishmael, managing editor of crypto for Bloomberg News. It's Tuesday, October 11th. All the way back in March, President Biden issued an executive order that directed every relevant federal agency to work on guidance related to crypto, and then, within a couple of months, to report back.
This is the first or the strongest announcement or pronouncement that we've seen from President Biden in terms of crypto regulation. We've never seen this kind of action come out of the White House.
We're now into that time to report back window, and the White House, along with other agencies, have started providing updates on their findings. On the White House end, for instance, policy recommendations include suggestions focused on better consumer and investor protections. But what about the big guys? The agencies like the Securities and Exchange Commission or the Commodity Futures Trading Commission, both of whom have a stake in crypto regulation. Here to break down the latest developments is Bloomberg reporter Allyson Versprille.
I think in terms of kind of government speak, it is still very new. I think they're still kind of wrapping their arms around the technology, and they don't want to, move too fast and do something that has repercussions.
Allyson, welcome back to the podcast.
Thanks for having me.
I can't decide if it's technically busy right now in regulation or not busy. We're in a weird place. The last time we chatted, the last time you were on the show, we were anxiously awaiting the arrival of various reports that were tied to, the big White House executive order on crypto that happened back in March.
He gave various federal agencies, both financial regulators and some non-financial regulators, mandates to look at different issues, to look at some of the concerns we have with this space, but also some of the benefits that the crypto industry and sector could provide, and come up with recommendations about what types of regulation are needed going forward.
We're now in the period when they're starting to release those. What's the content of those been like? Is there anything in there that you've been surprised by? Is anything groundbreaking? What's the reception?
I was talking to someone about these reports, and I think the word that was used was unsatisfying. The reports they talk about a lot of the potential benefits, actually mostly focused, though, on the risks of digital assets. And, they kind of indicate areas of further study. For instance, Treasury has been tasked with studying the illicit finance risk of decentralized finance as well as non-fungible tokens. And we should be seeing those reports next year. But there was really not a lot of clear, we need regulation on XYZ, or we're solving the question of whether digital assets are securities or commodities. So really these main questions that the industry has are still unanswered. I know the Crypto Council for Innovation, which is one of these big DC-based trade groups, did say that the reports basically just kick the can down the road. And they, said that it showed an outdated and unbalanced understanding of the technology. So I can think it's safe to say that the industry is not too happy with where these landed. So
did they want regulation? Is it the usual cry of clarity is what we desperately seek? What's the unsatisfactory part?
I don't know if I'm in the head of exactly what the industry is going with here. They always say that they want clarity. I know some, especially some of the former, government officials that I'll talk to say, well, they want clarity, but they basically just say they want rules different from other industries. They want easier rules to follow. So it's hard to say what the real motivation is, but I can say that I feel like a lot of the questions, at least, that they had were not answered by these reports.
Now, avid listeners of this podcast will have recently heard an episode that we did based on a Twitter Spaces, just for maximum multimedia integration, but based on a Twitter Spaces that you and our colleague David Pan conducted with someone who was advising the White House on crypto policy. The climate element of this does seem to be one area where there were a few more specifics.
Yes, I think the climate report, offered more insight into where the White House stands, more so than maybe some of these other reports. They did indicate that they were worried about some forms of crypto mining, in particular, proof of work, which is used to verify and mine transactions on the Bitcoin blockchain. They also said that they think, there needs to be more information disclosure, so that they want more information from miners. They also would like the federal government to work with states to establish standards. And then if that doesn't work, they said White House maybe consider executive actions, or Congress maybe consider legislation. So there were some interesting aspects to it. I think, again, it does still fall a little short of, here are the exact information disclosure requirements we're going to impose, and we're doing that by X time. There were not really any time frames in the report. So interesting, but still not a lot of concrete information or timetables there.
Is it unusual for there to not have been any kind of concreteness or timelines? Like, just for people who don't avidly read reports from government agencies as their job, was anything about this surprising?
I don't know that it was surprising. I did talk to someone who used to work in the government, and the person did kind of suggest that a lot of these times, these executive orders are sort of pencil pushing exercises, as I think how the person described it. And then they also kind of gave the example of a lot of times we were seeing these requests for comments on the reports that were about to come out about a month before the report was actually supposed to be released, or maybe 2 months, which isn't really a lot of time to kind of take in comments and digest them and then put something out. And so this person was sort of suggesting, without at the time knowing what was in the reports, was sort of suggesting like, I don't know how much we're actually going to get out of this. And from my understanding, in talking with this person, it's not abnormal for that kind of executive orders to result in these kinds of reports of, let's do more research. I think the interesting aspect is it does show that the administration is still looking at this, that they do care about this subject, that it's probably not going away, that regulators and agencies are going to be interested in digital assets. But it does kind of show we haven't come to any conclusions on anything.
It's funny that you say, a decision to do more homework. It's almost like never-ending academia. We invite you to study this additional proposal. Then request comment on.
The reports they continue to come. So we're going to have a report in October from the Financial Stability Oversight Council, which is led by Treasury. And that is going to be on financial stability risks and potential gaps. And it's supposed to offer recommendations on how to close those gaps. So we're not done with the EO reports either. There's going to be more. So we'll see. We'll see what's in them.
Can you talk a little bit about what the SEC and the CFTC have been up to here?
Sure. So the Securities and Exchange Commission, the chair there, Gary Gensler, has been really clear. And I feel like he's, only gotten a little bit louder on this messaging that he thinks, a lot of these exchanges should be registered with his agency. They're illegally offering securities. So he's been pretty clear in that. And he's been pretty clear that we should likely expect some enforcement in this area. I think one thing that's interesting is that a lot of folks I talked to were expecting this month to be very, very busy when it comes to crypto enforcement. And we've seen some cases that are pretty interesting, but that are hitting kind of smaller fish. We haven't really seen a big company, like a Coinbase or an FTX or something like that would make a splashy headline that would say, we're really going after the industry. We aren't afraid to go after big players. So it'll be interesting to see how that develops, and if we start to see more action there over the rest of the year.
Have there been more comments from folks like Gensler in terms of the specificity of the things that he's thinking about or worried about? And has any of this evolved over time? Are we seeing more focus on areas like stablecoins compared to the earlier part of the year? Or is stablecoin still the thing that everyone's talking about? What's the trend right now?
So on the SEC side, he's talked a lot about the top issue of, are you illegally offering securities? But then he's also talked a lot about companies needing to separate sort of their custody function. So, they're holding assets for customers from their market making functions, from basically just segregating these different parts of their businesses so that there's not a conflict of interest in how they're operating. So, I mean, that's been something he's been talking about a lot. It started back in the spring and it's kind of escalated from there. So, an area that we probably should be watching.
When you say it's an area that we probably should be watching, do you have a sense, is it even possible to have a sense going into 2023 of what some of those priorities might be?
It's hard to say. I mean, the EO reports, I guess one of the things that was interesting that came out of it was that the administration did encourage the SEC and, its sister organization or sister agency, the CFTC, the Commodity Futures Trading Commission, to continue using their existing authorities to take enforcement actions, to carry out investigations. So it's clear there's some blessing there. So I think we could definitely watch to see if these agencies are continuing to be more aggressive on the crypto space. Mm-hmm. On the central bank digital currency front, the U.S. has not come to any conclusions on whether or not it wants to move forward with its own CBDC. These reports did show that it's still a high priority to continue looking into this, but Treasury, I believe, said, the research alone could take several years. So more studying to happen. And I think actually interesting, too, is that you can see some sort of people walking back earlier estimates of how soon we might get a U.S. CBDC. Some strategists at Bank of America had originally predicted, we're going to see one between 2025 and 2030. Now, in a recent report, they said, okay, we think that might have been too optimistic. We're going to dial that back. They actually didn't even give a new time frame, but they just said that we don't know if it's going to come before 2030 now. I think that's another area to watch is as these other countries do start making a lot more progress, do we start seeing a lot more pressure on the U.S. side to do more?
We'll be right back with Bloomberg reporter Allyson Versprille on the latest as it relates to the White House and crypto regulation. When I've spoken to folks in the past, one of the things that they've said is there's a lot of interest in the national security community for, a digital dollar. They're framing it as this is an important thing to maintain the integrity of U.S. borders. They worry about the rising influence of stablecoins. They worry just kind of competitively about being left behind, as you've mentioned, by other countries who might be further ahead. Are they still the loudest voices in the room on this, or is that tenor changing at all?
I think that's right. I think the national security folks, and the White House National Security Council, that's kind of top of mind when they think about the CBDC. And there was actually a recent hearing where a lot of what was talked about was, the national security concerns or, maintaining the prominence of the U.S. dollar. So I think we'll start to hear more and more of that. I think it'll probably get louder. And I think another thing to think about is, the U.S. likes to be first on these kinds of things. They like to be the standard setters. So if they feel like these other countries are moving forward without them, I can imagine that's not sitting well with some folks in the administration. So you might see some kind of internal pressures as well. And, I think we definitely should be keeping an eye on that.
So this is kind of the tension between the let's do more homework and the let's get this done contingents.
Yes. Yeah. It's, they're very interesting dynamics. I think part of this is all still very new. I mean, I know the crypto industry would say we've been around for a while now, but I think in terms of kind of government speak, it is still very new. I think they're still kind of wrapping their arms around the technology and they don't want to, move too fast and do something that has repercussions. And then you obviously look at they're facing some pushback on the CBDC front from the banking sector, which is a pretty strong lobby in the U.S., I would say, because the banking sector has said, we think this is going to make commercial deposits less, desirable to U.S. consumers. And then how's that going to affect us and the amount of credit that's out in the market?
All right, so we gotta do like a nerd step back for 2 seconds.
Okay.
Because I'm a bank, you're a customer. You currently have an account at like Bank of SMI, tons of money because, why not? Why would the existence of a central bank digital currency compete with your desire to deposit money at the Bank of SMI?
what people would say is, well, if it's the government is backing these tokens, that obviously is a much more desirable asset to have than having to rely on these private sector banks. So that's kind of the main concern I hear. And banks really feel like they don't have an opportunity to compete in that kind of instance.
Which is why there are many ways that folks are looking at doing a central bank digital currency. And as much as I might laugh about homework, as a person who loves homework, in kind of the details of some of these proposals are things like, well, one of the things that banks offer, one of the things that I would offer to you to incentivize you to maintain that account is interest, right? It's like in this current environment, you're getting better interest rates on your deposits than you might have been a while ago. I also potentially offer a suite of different services, like maybe I offer you credit cards or, the ability to get a home loan or an auto loan, which are not necessarily things that the government might offer to somebody who's banking with them. So this is definitely a devil in the details thing, but it's not so clear to me, at least, that the bank lobby is going to be as vulnerable as they're making it out to be.
In the letters that I've read from the banking industry, they've talked about, even if the government were to not offer interest on people's CBDC holdings, or even if the government were to put a cap on how much CBDC people could actually have in their accounts, they continue to kind of make the argument that it would still have a very negative effect on banking. So they've kind of taken into consideration maybe the things that the government would do to sort of help out the banking sector, and they're still, pushing back a bit on this. I'm definitely going to be watching to see how this whole dynamic plays out going forward.
Well, I can't promise that we will still be talking about banking regulation on the podcast in like 2035 or whenever US CBDC actually happens. But hopefully some of the other proposed changes will go from proposed to possible in the not too distant future. And we will absolutely be having you back for an update then.
All right. I look forward to it.
All right. Terrific. Thank you again for coming on the show.
Thanks for having me.
You can find more of Allyson's reporting on the Bloomberg Terminal on Bloomberg.com and on Twitter. On Twitter, she's at Ally Versprille. That's ALLYVERSPRILLE. On the next episode of Bloomberg Crypto, one of the more, or maybe less, unexpected side effects of this crypto winter has been an absolute outbreak of CEOs rushing for the exit. We'll be talking crypto CEO succession. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeart Radio. For more shows from iHeart Radio, visit the iHeart Radio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. Or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producer is Sharon Barrero. Associate producer is Ty Butler. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacy-Marie Ishmael. We'll be back tomorrow.